Welcome to aminacademy.com. In Aluminium World, let us discuss about airline economics, some introduction. Unlike many service businesses, airlines need more than storefronts and telephones to get started. They need an enormous range of expensive equipments and facilities, from airplane to flight simulation to maintenance hangars. As a result, the airline industry is a capital intensive business requiring large sums of money to operate effectively. Most equipment is financed through loans or the issuance of stock. Increasingly, airlines are also leasing equipments, including equipment they owned previously but sold to someone else and leased back. Whatever arrangements an airline chooses to pursue, its capital needs require consistent profitability. High cash flow. Because airlines own large fleets of expensive aircraft which depreciate in value over time, they typically generate a substantial positive cash flow, that is, profits plus depreciation. Most airlines use their cash flow to repay debt or acquire new aircraft. When profits and cash flow decline, an airline ability to repay debt and acquire new aircraft is jeopardized. Now, let us discuss further detail about airline economics. Several key factors influencing airline economics, including economic conditions, fuel prices, competition, labor cost, and geopolitical issues. These factors can impact an airline's profitability, operational cost, and pricing strategies. General economic health. Strong economic growth typically leads to increased business and leisure travel, boosting airline demands. Conversely, economic downturns can reduce travel, impacting airline revenues, income, and disposable income. In the airline industry, income refers to the total revenue an airline generates from all sources, including ticket sales, ancillary services, and partnership. Disposable income, on the other hand, is the portion of the airline's revenue remaining after all expenses and taxes have been deducted, representing the money available for reinvestment, debt repayment, or distribution to shareholders. It's a key metric for understanding an airline financial health and profitability. High per capita income and disposable income tend to correlate with increased air travel. Exchange rates. Fluctuations in exchange rates can significantly affect international airlines as they often pay for fuel and other operational costs in US dollars. Fuel prices. Fuel cost. Fuel is a major expense for airlines, and any changes in global oil prices directly impact ticket prices, operating margins, and profitability. Airline fuel costs are significant expense representing a major portion of operating expenses. For example, in 2024, the global airline industry fuels bill was estimated to reach $291 billion. Fuel costs are a key factors influencing the cost of flight ticket. Factors influencing airline fuel cost. First, global oil prices. Jet fuel prices are closely tied to the prices of crude oil, which can fluctuate due to various factors like geopolitical events, supply and demand, and economic conditions. Geopolitical events, what is that? Conflict can disrupt oil supply and lead to higher fuel prices. Fuel consumption. The amount of fuel consumed by an aircraft depends on its size, type, and flight duration. Sustainable aviation fuel, SAF. The US of the use of SAF is increasing, which can impact fuel cost due to the higher cost of SAF compared to the conventional jet fuel. Air traffic and passenger demand. Increased air traffic and passenger demands can lead to higher fuel consumption and potentially higher fuel cost. Supply and availability. The stable and reliable supply of aviation fuel is crucial for operational sustainability. Competition. Market structure. The level of competition in the airline industry affect pricing strategies and the ability to airlines to pass on cost increases to passengers. Low cost carriers, LCCs. The rise of LCC has increased competition and put pressure on traditional airlines to lower fares. Route duplication. Overlap in routes can lead to intense competition, potentially reducing profitability for all airlines involved. Labor cost. In the airline industry, labor cost typically represents a significant portion of overall operating expenses, ranging from 25 to 30% of the total cost. While fuel cost can fluctuate greatly, labor costs tend to be more stable in the short term, making them a key factor for airline managements to control. Wages and benefits. Labor costs, including salaries and benefits for flight crews and ground staff, are a significant expense. Labor shortages. Labor shortages can impact operational capacity and increase cost. Geopolitical factors. Political instability. Political unrest and conflict can disrupt travel, impacting demands and increasing operational cost for airlines. Trade disputes. Trade wars and other international disputes can affect airline routes and pricing. Some other factors. Capacity changes. Airlines need to manage their capacity, available seat miles, to match demand and maximize profitability. What is the load factor? The percentage of the seats filled on a flight, that is a load factor, is a key indicator of efficiency and profitability. In the airline industry, load factor refers to the percentage of available seats on a flight that are occupied by passengers. It's a key metric used to assess an airline's efficiency and profitability. A higher load factor indicates that an airline is effectively utilizing its capacity, meaning more passengers are flying on each flight. What it measures. Load factor quantifies how much of an airline passenger's carrying capacity is being used. How it calculated? It's typically calculated as revenue passenger kilometers per available seat kilometers into 100 is a percentage. Revenue passengers kilometers represent the total distance traveled by the passengers, while available seat kilometers represent the total potential distance for all seats on a flight. About technology. Technological advancement can help airline improve efficiency, reduce cost, and other better services. Technological advancements are revolutionizing the airline industry, enhancing efficiency, safety, and passenger experience. Key areas of innovation include artificial intelligence (AI), autonomous system, biometrics, and digital transformation. These advancements are impacting everything from pilot training and aircraft maintenance to airport infrastructure and passenger services. So far, we discussed about airline economics and its various factors. We have done. Please subscribe our YouTube channel.